How y'all doing? What's up? What's up? How y'all doing, family? What's up? What's up? We're gonna start in 1 minute and 30 seconds. What's good, family? How y'all doing? What's good, family? How y'all doing? What's good? What's good? How y'all doing, fam? What's up? What's up, fam? How y'all doing? We about to start in 30 more seconds. What's good, family? How y'all doing? We about to start in 10 more seconds. What's good? What's good? How y'all doing? How y'all evening going? What's good? All right. I got a plan, y'all. Tomorrow, we going into the first bank and we gonna up our credit and rob them blind. Take everything, every dime, every quarter, every penny. Not just playing, but for real, that's how it got to be in these times. And I tell a lot of people, don't ask nobody else for money. Ask your bank for money. Ask your local bank for money. It's so many credit plays right now, y'all. It's like it's ridiculous, like on how much you got access to in this world, and there's really no limitation. So when I see a lot of people online scamming people, doing fraud, and try to cash bogus checks in the bank account, I'm like, what? Do y'all know there's people out there that's getting the Navy Federal flagship card with an $80,000 limit, and there's people out there that's cracking the car for $5,000? That's insane. Because one thing about it, it might have never been taught to us, like certain rules and everything that we should play by, and how we should appropriate the whole thing. But I'm going to tell you this: you need to enhance your credit profile. You need to add accounts to your profile. You need to go on these sites and get it done, and make sure that your profile is sufficient. Put yourself in that position, because when you're doing your hobbies and all that stuff, and you're going out with your friends and all that, you can be using that time to be building up your profile. Because remember, it doesn't take any real education to financially free yourself. You get what I'm saying? It don't take no education. You don't have to go to college. You don't have to be the smartest person in the world. Hey, you don't even have to deal with me. You don't have to buy my credit courses. You don't have to do any of that. Only thing I'm telling you guys, the same method that I'm using, I'm not taking no special steps. So this is my whole take. I'm telling you guys, let's just say if you got a corporation, this is how easy it is, right? I'm gonna make it so simple. Let's say if you got a corporation and you at least had the corporation 2 years, minimum 2 years, right? So if you had the corporation 2 years, you can go straight to, I'm gonna give you 3 banks. You can go to Chase, you can go to Wells Fargo, and you can go to BMO Harris, either one. And you can ask them about one of their products. One of the products will be an unsecured business line of credit, right? Write this down. You can get an unsecured business line of credit. Now, every company have their caps. Caps mean if you go over a certain amount, or you wish to get a certain amount, that's when they're going to require you to bring documentation like tax returns, business, financial statements, and everything like that, right? So let's just say out of all of them, you go with Chase, right? Okay, boom, you go with Chase. You've been in business 2 years, right? Let's just say your personal credit score, I'm gonna put you at this credit right now, right? Have over 720. Before you go in the door, 720, all 3 credit bureaus, right? I don't know which one they run, so don't quote me on that. So Wells Fargo run Equifax for the loan, and BMO Harris run TransUnion. I don't know which one Chase run. I never got the inside scoop, but it's nothing to just ask the representative which credit bureau are they running, so you will be informed, right? So now, before you apply, let me know the type of industry that you are in, right? So if a person say I'm in retail, I'm gonna say no, change your industry. What should I change it to? Say manufacturing. Why would you say manufacturing? Because the type of industry that you are in, it really matters to the banks. So if a person came to me, right? They want $100,000 loan. And I say, okay, what kind of business do you run? And they say retail. Now, retail might sound like, oh, wow, you can make some money for it, right? But the thing about it is the bank's looking at what is high risk, what is low risk, what can I benefit from, and how will this be a solution to me lending to him? Because if I'm putting $100,000 towards something that this person can possibly fail, and if there's nothing tangible, then 9 times out of 10, the bank can reject that. But if you put yourself in a position like manufacturing, right? So instead of buying products, you saying, hey, I'm buying equipment. So cool, you buy equipment, right? Now you don't have to tell them what you're doing with it. It's just your industry. So if you with manufacturing, maybe trucking, construction, brick and masonry, electrician, you dealing with, let's just say if you catering, that's a good industry too. Catering, consultant, that's a very good industry, right? So very low risk industries. And the way to figure out if you're in a low risk industry, you got this site called NIC. It's for your corporation. You know, you get to see what type of industry you is, but that's not going to tell you if you high risk or not. I can personally tell you because the people at the bank and the institutions tell me like, hey, you don't want to be in these industries. If you say you in these industries, they automatically going to reject the application. So let's just say, boom, you in a good industry, right? So let's just say catering or consultant. Let's just say consultant, right? So you a consultant, right? So after that, when it says stated income is only telling the banks how much do the business make annually. It doesn't have to be net profit. The numbers don't even have to be accurate. You can make $100,000 a year and say, oh, I make $200,000 a year. Who will know? No one, right? Now, people say, oh, that's lying. It's legal to lie. It's illegal to commit perjury. So yes, you can lie, but not intentionally to defraud the bank, but using it to get the credit services, but making sure that you pay it back on time. Never mess up with paying anything back. Make sure that you establish those relationships, because by establishing those relationships will extend you more, right? So you come in there with a 720 credit score. The next step is making sure that the business is 2 years and better. The third step is to make sure that the industry is not high risk. If the industry is low risk, if you're not sure if it's high risk or not, just say, hey, Taquan, this is my industry. I'm a truck driver. What's up? Yeah. How much you trying to get? I'm trying to get 150,000. Okay. You just transporting. What are you transporting? Transporting oil. Okay. Perfect. That's a good industry. Not bad. Let's say if a person was an auto body mechanic, very good industry to be in. So if you with that and you say, hey, I want to borrow 150,000, boom, that's a good industry, right? So you got 720 credit score. Your business is over 2 years old. You in a low risk industry. After that, loan amount, right? So how much would you want your loan amount to be, right? So I know BMO Harris, the max you can do is 50,000. That's without documentation. Let's say if you go to Wells Fargo, you can go up to 350,000 if I'm not mistaken, 300 or 350,000. But I know it's over 300,000, and you can get it without documentation, meaning you don't have to show them pay stubs, you don't have to show them tax returns, you don't have to show them anything. These are only stated income, unsecured business lines of credit, right? The third bank will be Chase. The Chase cap is at 250,000. So you can get $250,000 with Chase on an unsecured line of credit. Some people might ask me, what do I need on my credit report? Make sure you have an auto loan. Make sure you have 2 and better credit cards. Make sure that the credit card is primaries and they are over 2 years old. Why would I say that? Because many people who come to me and they say, hey, how can I, how would I know if I get approved? The way you would know if you get approved is by the amount of debt you ever took on. Don't expect to get a $150,000 loan if you never took on real debt, because that's what the bank's looking for. So you might have a credit card that you paid back 100 times. You might have a loan account that you pay back all the time, but they want to know what type of debt and what the amount is of the debt that you took on. So if you took on an auto loan and this auto loan is, let's just say, 60,000, right? That's good. That's good to any bank, because now the bank's going to look at it like, okay, it's a good situation. He want to put up. He been paying this much for the car. He want to borrow 150,000. No problem. We'll give it to you. But let's just say if the car is 4,000. Now the 4,000 don't mean you pick up that much debt. You will be a high risk borrower to the banks, so therefore they will reject your application. Here go another thing you need. You need to make sure that you do not have inquiries. So by the time you go to the bank, make sure your inquiries is less than 3. Yes, I said it, 3 to 4. Make sure it's no more than 5. I would say that. And the reason why I would say that is because most banks are inquiry sensitive. Those 3 banks that I mentioned to you are all inquiry sensitive. If your credit report like that, you got auto loans, 3, 4 credit cards on your credit report, a few revolving accounts, good. Then you can go ahead and try for it. Now, if they somehow reject you, they will give you a reason. Now, for me to explain how can I be on the safe side? I told you guys this a million times, but you guys ain't understanding what I'm coming from. Why is it that some people will get rejected even with a good credit report? That's because you didn't take on one debt, and that's mortgages. Housing is one thing that if you took on, you will alleviate most of the problems that you have. So when the banks look at it and you took on a $200,000 house, of course they would give you $150,000 unsecured line of credit. Yes, they would give you 4 auto loans for your business, because now by you taking on a mortgage, you actually show stability in your credit report. So the other stuff I just mentioned, that's for those who got regular credit reports, and it's good. Now, I'm not saying you won't get it, but the amount that you asking for could be an issue. But if you want to make sure you keep it good, keep it under 100. 100 and better, perfect. And another bank I know, you can go through PNC. PNC probably one of the easiest banks. If you guys go tomorrow, you can go right tomorrow. Make sure that your credit reports show less than 5 inquiries, or get those inquiries wiped off, and they only run Experian. PNC Bank only run Experian for the $100,000 unsecured business line of credit. And I want to say it's stated income. It's stated income. Anything over 100, I think you got to show documentation. But for the most part, it's stated, and you just they run your Experian. And Experian is one of the most easiest credit reports to dispute inquiries. Now, if you had it on TransUnion or Equifax, you might be in a little fight. But if you got it on Experian, you shouldn't have no problem, because Experian gonna take them off. And that's it. And that's how you become financially free. Now, some people might say, okay, what do I do with the money? This is what you got to do. Let's say if you're dumb, you don't know nothing. Let's just say if you have no clue, don't know how to mess with it, nothing, right? The best thing to do, perfect. This is what you got to do. Learn how to move the money around. And the reason why I say it's best to move the money around, because if you got a corporation, right, you can personally, right, use those funds, and you can do an electronic deposit towards another company that you might have. And by that company, let's just say, receiving the income and everything like that, and it's just going back and forth, almost like you got a relationship, you can create your own commercial invoices with your companies, right? So you got an invoice for this company, and the company that you got a loan from, the bank's looking at all the invoices that's getting transferred. So you transfer this amount, you can make it where you withdraw the full amount, and you can deposit it into your regular bank account, and therefore you can be paying back the unsecured line of credit. But that doesn't stop there. Just because you get one unsecured line of credit, that don't stop you from getting the next one, because remember, they're reporting it to your your business credit. So when they start reporting it to your business credit, the second thing you do, go grab another one. Then if you get it at PNC, you go to BMO. You get it at BMO, go to Chase. You get it at Chase, go to Bank of America. You get a Bank of America, go to Wells Fargo. Get 200,000-300,000. You get 300,000. Okay, this is what you also do. You learn how to move the money around. How do you move the money around if and everything like that, right? Here go a few ways you can move your money around. You can move your money around just to enhance your credit report. You can grab a house to put it on your credit report. But if you chose not to, you can go straight to any institution, right? I prefer cross-country mortgage, and put 5% down. That would be $50,000 towards $1 million, and you can get you a home built. Now, if you don't know what home to build, this is what you do. You go to Home Blueprints for Sale. You can find it on Google, and you can find a whole list of all the homes that you want to watch. That you want to purchase, right? You can look at building blueprint. Building blueprints. So you looking at 2-story home, 1-story home, boom, you find you a home, right? Now you got to look at location. where I'm gonna put this house at. Let's just say Arizona. Now you sitting on 200-300,000, right? Now you put $50,000 down, you close at the table. Now the contractor that you hire, right? You got to hire your own builder. And now once you build it, your lender is going to ask you, what do you expect the house should be worth? So if you put $1 million down, let's say if it's worth $2 million, that's $1 million in equity that the house have, right? So you built that home just to move in it. Now, by you moving inside the house, right? Now, of course, you're paying mortgage or whatever the case might be. Now, you take this same house and borrow against that house, right? Now, let's just say you borrow 80%, and you go right back to the same bank with 50,000 and get another house built. And guess what? When you build the other house, that house can be the rental house. So the rental house, you can have somebody to rent it, and it can be the same amount for the mortgage, taxes, insurance, and all that stuff you paying on your original. I mean, for the house. And that person is only just paying the mortgage. You get what I'm saying? And so the next house you built, it got so much equity in it. You pull it from the equity of that home, and they just paying the equity back, and they paying the mortgage. You just making sure that you calculate and do the numbers, and you going back and doing the same thing. So you pretty much moving money around, because remember, we dealing with only borrowed money. All money is borrowed. Even the money that's in your bank account that you think you own today is all borrowed, because eventually when the feds take over, when the Fed take over, the same thing they're gonna do. They can raise inflation, drop it, they can raise it. Everything is strictly debt. It's all debt-based system. This is not actual money. This is not gold and silver. So your goal is to learn how to move money, manage money, keep money, and expand money. So that has nothing to do with interacting with any customer. That whole blueprint I just explained to you has nothing to do with interacting with any customer. You don't have to sell the home. You don't have to put the home on anything. And the only thing that involves a customer, let's just say if you build another house and you want to rent it out, that's only if you want to rent it out. 9 times out of 10, a brand new construction home, someone want to probably rent it out, right? But let's just say if you do, they rent it out. That's good. And the only thing they doing is paying back your mortgage. So that house is good. And you took out equity line of credit on that, and you getting 2-3 more houses built. And every time you get a house built, you put it under the LLC and the corporation. So now the corporation, you got 2-3 homes on your credit, and it's showing $1 million. Then you go to Apple. You ask Apple for $1 million. You can ask Apple for $500,000, and Apple will give it to you. It's called. Go to the website called CIT Financing, and this is Apple Bank. This is the bank that lend. This is Citizens Bank. Citizens Bank is one of the banks that lend for corporations or individuals who want an Apple line of credit. This is only for businesses, not individuals, but this is only for businesses that has at least 5 years in history. Now, with the type of credit criteria that you have, they're going to ask you, since you don't have 5 years in history on your business side, can they run your personal? Then your personal show houses as well. So you got that showing, they run it, you approved. Let's just say if they approve you for 200,000-300,000, right? You can literally go to Apple, right? And remind you, I'm gonna tell you something. Did you know if you're a corporation in the state, just apply for your tax exemption license. So you can get any phone you want tax exempt. So you can get as many iPhones you want tax exempt, sell it for that same price. So hold on. So if you get 100 iPhones, let's just say 200. Let's say if you get 200 iPhones and you tax exempt, so that means 200,000 flat, right? And you went and sold the same iPhones for 200,000. Now, what the difference is, you not charging them tax and you not paying taxes. The goal is you were just using the iPhones to transfer and liquidate the phones to get actual assets, which would be cash. And you use the cash funds to buy more properties, or you use the cash funds to build way more, whatever you're gonna do with it. It's a system where you can use to make money where you don't have to involve any customers, meaning you don't have to sell much. That's just the pitch I threw in. Like, okay, if you want to go and buy iPhones just to sell it, you can. But if you want to also borrow money to build yourself up to borrow more money, then borrow more money and pay that money back that you borrowed and get way more, you will constantly borrow. So your entire existence is borrowing. Now, if you ever want to pull back and file for bankruptcy under the corporation, you can do that. So let's just say if you took out over $3-4 million and you say, hey, I'm filing for bankruptcy, and you took all the money into your personal funds, they won't go after you. It's the business at jeopardy. And then after you file for bankruptcy, you get forgiveness from the government. The government forgave you for it. The banks and all that charged off the accounts, and they got their money back through a tax write-off when they declared it as a loss. The government forgave you. Your corporation's reinstated and everything like that. You go back to doing the same thing. So it's not really rocket science. And that's why I had to learn. So I'm thinking around, I'm like, man, I got to sell somebody something. I got to get a lawnmower. I got to do this. I have to sell stuff. But that's not always the case. You can borrow money to get way more money and borrow more money to get money to pay that money back and borrow way more money. And that can be your entire existence, where you just learn how to utilize the banks. Where everybody going around here stressed, oh my God, what to do? But you have to learn how to manage it well. So you just can't be clumsy with your finances. You can't be clumsy with your credit cards, moving around however you want to move just to make a quick dollar. You have to know how to put systems in place and make sure everything is balanced. So if you got 200,000-300,000, that's not to go shopping with. You can leverage 200,000-300,000. You can leverage 200,000 of that 300,000 to put yourself in a position to borrow $1 million. And what would that be when you have 200,000? 200,000 needs to go towards a real asset, and this asset is only dealing with you. And the home that you're building is only for you. So a customer don't even play any roles in this. So you're not trying to sell a house. You're not trying to rent a house if you don't want to. You just simply building a house that exceeds the equity exceeds the normal value of that home to borrow against the home. Now, of course, the average person, to make more money, they will build a home, pull the equity from the home, and still have someone renting in that house, and they paying back the mortgage and the equity that you took from the home. And while they renting the home, the money that you pulled from the equity, you went and bought and built 2-3 more properties. Hell, you can put your family in if you want to, and they don't have to pay nothing. That's just if you want to. But I know everybody want more. So if you want more, so your mortgage and your equity loan, let's just say if that's combined $8,000 a month, right? Realistically, for $1 million home, let's just say if you're paying $8,000 a month because you took out all of this, right? So you paying $8,000 a month, you could charge the person who rents it from you $8,000. But let's just say if it's ultra luxury, I overscaled it. If you borrow $1 million, of course you're gonna be living in the best neighborhoods. You're not gonna be living in the middle of the hood somewhere. You're gonna be living somewhere very luxury. So the person whoever renting the property is gonna be paying about $8,000-$10,000 a month, probably 10, especially if it comes fully furnished. So you can get a corporate line of credit through Lowe's. You get a corporate line of credit through Amazon. You get a corporate line of credit through Ashley's Furniture as a corporation, and you can furnish the whole entire house. Now, instead of paying $8,000, you put it up for $11,000. So he rented out for $11,000, brand new house. He paying back the home equity line of credit, paying back the mortgage, and you might walk away with like a stack, right? $1,000, right? So if you walk away with $1,000, he paying back that. You just borrowed $800,000 from this house. You got 4 or 5 more properties getting built doing the same thing. And you just learning how to borrow money. So you're not thinking so, like, this is the thing, we used to think so hard about it, like, damn, don't it take a lot of hard work? I got to put a system in place. I got to make sure. No, it's that simple. It's not hard at all. I promise y'all it's not hard. It's not complicated, because once I start learning how to borrow money, but I wanted to exclude people. And what I mean by exclude, like, you always going to need people, but what I'm saying is I want to create a system where I can make money, I can generate money, and I can borrow as much money as I want without having to worry about the dependency of a customer, which will be borrowing. And if you're borrowing to build assets, to borrow against the assets, where does the customer plays a role at? None. Meaning you don't have to deal with anybody. Meaning you can have all of the assets, all of the property, and all of the liquid cash to yourself without a customer. Now, the customer only comes in when you want to rent them out. Now, of course, it's going to be rented out, but I'm just saying, just look at it like that. The same way when people, let's just say it's people out there who in position to borrow 50,000 or 60,000. The goal is to replace your income from your 9 to 5 and then put yourself in a position where you can be in a position to borrow 100,000. So let's just say 90% of people on this channel might not make 200,000-300,000. But what if you was in a position to borrow 200,000? 200,000 covered 1-2 years of your expenses. So that covered 1-2 years of your expenses. Learn how to put that $200,000 to work, so you can be able to borrow 500,000. Because remember, we are only borrowing. This is not our money. This is the Federal Reserve money. These are federal debt notes, and that's exactly what I be doing. Borrowing money, borrow. It's all this about borrowing. You don't even have to work hard to borrow. Imagine this. The government prints money every single day, every single second. And every dollar that is printed is debt, right? So if I'm making $70,000 a year, I would have to work an entire year to make that 70,000. After I work that entire year to make that 70,000, I still have to pay taxes on that 70,000. But if I borrow $100,000 from a business unsecured loan, right? I don't have to pay no taxes on money that I borrowed because it's a loan. So it's not like I get the 100,000 and say, okay, I got to give the government 30,000. I don't have to give them nothing. I borrow 100,000. And if I borrow 100,000, remember, when I go to the mortgage company, I come with 50,000 for the construction loan, right? How much would this cost for this project? They might ask my contractor. My contractor might say it costs $1 million. Okay. This costs 5% down. 5% down is what? 50,000. So that 100,000, break it in half. I get them 50,000. Now they built the property. What's the projected value? This home should be valued at $1.9 million, right after it's built. Now it's built. We close on the property. Now I might come out of pocket 20, 30,000, right? Okay. I come out of pocket. Now the house is worth 1.9 when I have my inspector come. I'll take that same money, right? And I go to my bank because you can do a not cash out refinance. You ain't even got to do that. You can do a HELOC. You can do an equity line of credit. You can do this as a corporation or an individual, depending on how you got the property. So if you got it as a corporation, you can borrow as a corporation. If you got it as a individual, you can borrow. Same, either way, it don't matter whether you do a personal or not, right? So you go ahead and do it like that, right? And so now once you get the equity line of credit, they give you up to 90%. 90% of 900,000. Let's just say seven something, right? Late seven something, right? 700 something, 780,000. And now, so you just borrow 700,000. You can take all your money to your accounts and kill a deal. Say, nope, I'm not paying nobody back. House still up. They foreclosed years later. You ran away with $1 million. No, I'm not saying do that because you can get more. Don't stop right there. But just think about that. Just let that sink in your head. You were just given $700 thousand. Imagine you say you make $70,000 a year. So it will take you 10 plus years to make the amount that he made just because he understands how to borrow money and use borrow money to borrow more money. That's it. That's all I do. And so that's the concept that I try to teach people. So when people go around and say, oh, he's scamming. Listen, it's not nothing special that I'm doing. It's nothing like a secret rock or something like that. Like I'm just design. No, this is that simple. It's that simple. That's all you're doing. You're not doing nothing special. You're not doing nothing illegal because anybody can borrow money. You see what Apple doing? Apple borrowed $200 billion. But it's just the thing that most financial experts always teach people how to make money, like say start an online business, sell courses, right? Now that can make money, that's good, but why not teach people to be in a position to understand the system and use the system for their advantage? Because the system is what? The banks. So who has more money than the system? Nobody. Who everyone depends on when it comes to lending and any finances anything that's being financed, the banks. When it comes to everything, what does it come to? The banks. What do you put your money in when you deposit? The banks. So why are people not putting two to two together? So if I'm doing all of this, say if I'm running, say for instance, you got a successful business. Let's just say if you make $10,000 a month, that's good. $10,000 a month, that's okay. But you just borrowed $100,000 in a matter of 1 hour. And you think that's the only time you get to borrow 100,000? No, because what if you pay a percentage back of what you borrowed? Now you're eligible to get more. So you just borrowed 100, and then you just went back another month and went to another bank and borrowed another 100, and you just went back again and borrowed more money, and you went to the bank with a portion of that money to borrow more money, and then you got to a point where you were worth $10 million. And guess what? You filed for bankruptcy. And now you was a shareholder and share owner of that account, or like you the owner, and you just withdraw all the funds and declare bankruptcy. Now you so-called broke, just like Donald Trump. And then you walked away with $10 million. Or you just kept it going. You just kept the game going. You get 20, 30, and then the banks want to offer you this amount of money. They want to offer you this amount of money. Now they emailing you like, hey, you want to borrow another 250,000. You already qualified. Like, huh? I'm qualified to take out 250,000. I'll take it. That's what we fighting for. And I had to know, like, now don't get me wrong, you got to be positioned to even get to that level where you can go to the bank and borrow $250,000. You got to be positioned. And I'm telling you guys, you got to put that real stuff on your credit. Now, for the small end, of course, you gotta build yourself up. It takes time. It's not overnight. Take time, and then don't take that much time. Let me explain this. You can literally build a solid profile in 3 months. Solid. I'm talking about extremely strong, meaning you can put over 60 accounts on your credit within 3 months. 60. And you can put over 5 to 6 of them can all report a renter's account. You could put 7 to 10 of them can be all installment accounts, and the rest of them can be straight authorized users, revolving lines of credit, and etc. It's that simple. And when you put yourself in that situation, now you got that many accounts. You can do it two ways. You can deal with it as a consumer, meaning a regular individual, or you can deal with it on the corporate level, like say if you got a corporation. But so for people who just individuals, you can do it just like anything else. You could take out $50,000 from PenFed. You could take out $50,000 from Navy. As long as you are able to pay them back, that's when management come in place. So I'm not telling you to get 50,000 and spend the entire 50,000 on Saks Fifth and expect to say, hey, I want to borrow $1 million. No, because you have to still be responsible with your money. We're not supposed to spend over a certain amount, especially if you're in a position where you want to build and borrow more money, especially when you're in a position where you want to get way more out of it. You don't want to just walk away with a 50,000, because if you can get 50,000, your curiosity stop at 50,000. You don't think like, man, what if I did 50,000 50 times? 50,000 50 times. Think like that. Start thinking like that. And then it put you in the right mindset. And it's a lot of banks you can get this from. I'll give y'all 10 banks right now. PNC, you can go through Navy Federal, Truist Bank, DCU, Digital Credit Union. What's another one? First Service Credit Union out here in Houston. Now, most of you guys don't live in Houston, so you can exclude that. Go to NASA Federal Credit Union. You can go to Green State Credit Union. You can go to Chase, Wells Fargo, Bank of America. Now, that's about 7. Let me see, BMO Harris. You can go to, I got a whole lot of them in my mind. You got to think. Wells Fargo, I think I said Wells Fargo, but Wells Fargo, what else? One more. Throw in USA, right? All of these banks, every last one of them you can borrow from. Now, I am going to tell you something. Traditional banks are much different from credit unions. And the reason why I say that is because traditional banks heavily required a certain profile. Now, traditional banks are more picky. They very picky. So meaning they looking at everything. They're looking at your credit history. They're looking at how many years you got on your credit and how many accounts you have. How sufficient is your credit profile? How much debt have you took on? You get what I'm saying? So it's a lot that plays in traditional banks. That's why I would prefer credit unions at first, but then you can transition to traditional banks, because remember, when you get your first line of credit, you get your first personal loan from, let's just say DCU. DCU giving out $50,000. So DCU give you a personal loan of $50,000 or even $20,000, and you paid it back successfully for the next 3 months. Any bank will give you $20,000. So you can go to Wells Fargo and say, hey, I need a personal loan. How much you want to borrow? $10,000. They check your credit report. You paying Navy Federal back for $20,000. So why wouldn't they give you $10,000? Think about it. And then with that credit criteria, you pay both of them back. Now you get into positions where now you can offer letters, meaning they sending you letters in the mail and they say, hey, would you like to borrow $100,000? You already pre-qualified. And pre-qualified, I know a lot of people heard that and some banks just be lying, but you would know if you pre-qualified if you actually have that in your credit report. So if you actually are in a position where you can borrow $50,000 to $60,000, then yes, they serious. It's not just a pre-qualification. And you actually walk inside the bank and do the same steps and get approved. And once you get approved from there, now you be like, okay, I can borrow money. Once you're in a position that you can borrow money, you can borrow as much money as you like, not millions, not like realistically 50. Let's just say 50 is your max. Most people don't make that in a year. If you could borrow $50,000 in cash in today's time where the recession going on, where people barely making ends meet, where everybody is dying off, and in times like this, you are winning. You are realistically winning because with that type of money, you could change an entire family. And now you have the ability to borrow, so don't mess it up. Don't mess up your situation. Do not over splurge. You can do a little splurging, but not over splurging. You know, if anything, you got 50,000, at least 10 should be spending money, nothing else. And I'm not talking about just spending. I'm talking about that's everything including like your personal life, your utilities, gas, mortgage, rent, and also include that 10,000 with paying your monthly bills for the loan that you borrowed. Because remember, you mess up your ability to borrow, then you can put yourself in a category where you're struggling and you don't want to mess that up. And now since you are able to borrow, you can go to many banks and borrow. So if you got 50,000, you can borrow from this bank, borrow from that bank, borrow from that bank, and you just constantly building up. And then the day you decide, hey, I want a trucking business, you can do that. Because I'm not telling you guys that you cannot still have your business. I'm not telling you guys that like you shouldn't think about a company. So if you a beautician, that's good. If you a truck driver, that's good. If you own your own restaurant, that's good. If you own anything that's tangible and you need customers and everything, that's good. I'm not saying that. I'm just saying it's ways where a person can use their banks to their own advantage to borrow as much money as they want. Just like that's all I'm saying, family. That's all. So it's not don't complicate it. That's what most people like to do. They like to complicate it. It's very simple. I promise you, a person with no brain can understand it if you just listen. They say, hold on, what? So you mean to tell me I've been working at this job every year for the last 5 years, making $40,000 a year. You mean to tell me it's people out there that can borrow $100,000 anytime they please? But even if you told me you can borrow that, because some people look at it like this, if they borrow money, like, oh, I don't want to be in debt. What? You're in a debt-based system. What do you mean you don't want to be in debt? Aren't you leasing a car? Debt. Don't you got money in your bank account? Debt. Don't you have a credit card? Debt. Don't you have a mortgage? Debt. Don't you rent an apartment they are financing? Debt. This is a debt-based system. The way to get rich in this world is debt. It's nothing else. Now, as far as the monetary system, now, of course, you can get rich at other things like agriculture and collecting gold and everything. Yes, but I'm just saying in this monetary system. And what are you working for? Debt. Because when they pay you a paycheck, they don't say, here you go, your silver coin, here you go, sir. Here you go to Clipper, clip it off and pay the store clerk. No, they give you reserve notes. They give you monetary notes. They give you debt notes. Debt notes is what I like to call them because it's all debt. It's a debt-based system. So what do the rich do to get rich? So take me out the whole equation, right? So this guy's a scammer. I'm a scammer, right? So don't believe me, right? What does every corporation do in order to get rich? They borrow. And how much they borrow? They borrow a lot. And if they borrow, how do they get richer just by borrowing? How? Because they expand more. And on top of that, they buy more assets to borrow more. So Apple borrowed 200 some billion. Yes, 200 some million, not billion, 200 some million, right? So if Apple borrowed 200 some million and then refinance that 200 million, and then they come back and borrow more, like it's nothing but a debt-based system. So the same thing I be saying about use your debt to get rich, learn how to use credit. It's that simple. That system is what the people need to understand. That system right there is what everybody needs to know. So it's not nothing special. You don't have to be a genius. You don't have to read well. You can be actually a college dropout, convicted felon coming home. You can be a felon doing 5 years in prison, and you can have an outsider. Let's just say if somebody you really, really love, and they can be doing this for you. And by the time you come home, you wouldn't have to work at a warehouse. You could be in a position where you homeless and you could be under a bridge. And as long as you're working at a temp agency, you can use all of that money from the temp agency to create a strong, solid profile. So when you walk into the institutions, they ain't looking at you. They're looking at your profile. So this is a whole digital system. Back then, you used to get a loan because they like you. Today, you got to get a loan because a digital system. You can look like an evil person And they'll still give you whatever you want because of a digital system said that. And there'd be a sweet lady coming in with flowers, gave the bank teller an apple and everything. And they look at her credit report, tell her she didn't have for a credit card. So this is what exactly what I teach you guys, exactly what I want you guys to understand. So it's not rocket science. It's not rocket science at all. This stuff has been shown, it's been proven, but it might just never been broken down that simple. You get what I'm saying? It's never been broken down that simple. Because when it's simple, it's like, wow, that's it. You get what I'm saying? That's it. That's all. No more, no less, nothing else complicated. Okay. Yeah, it's just like that, family. But what about the upcoming Revolutionary War? That's going to come soon. I have a car loan at 15% interest on the car. Should I take the car back? It's a Camaro 2017. Damn, you got a 15%. You can refinance it. That's the best thing to do. Just refinance it. Because that's a big percent. And 9 times out of 10, I can tell that you went through a finance company and not through a bank. Because finance companies usually allow a person to borrow way more and actually approve more than a traditional bank. Traditional banks are very hard on lending. So they leave it to finance companies. And usually finance companies be the one that have to go out there and repo the most cars because they want too much in interest. Because remember, they paying the banks back in, they want a little cut too. So really, the bank might charge them 7% interest, but they want 5%. So that, no. So you got 15% interest. So the banks can want 8%, and they might say, hey, I want 7% of that 8%, which make it 15%. And that's why it makes sense like that. Need trillions of dollars moving every day. Yep. I need to start on this credit plays this December. Start now. Start now. Please start now. Start building up your profile now. Make sure you don't do anything with it. Just let it build. Like me, I'm letting it build. Listen, I'm telling you guys something. I have never built my social security number. I have never really worked on it. The only number I ever worked on was my EIN number. I'm actually new to using my social. Not credit, but I'm new to using my social. I never used it. I never used it really. Only time I used it when I was 19 and I took on a credit card. I never knew about credit and nothing like this, right? So at this age, what I understand now is it's totally different. It's a whole different world. And now since I have my social and I'm using it, I can use it. You know, I can do this. It's a lot of credit plays, but you can use both. Whether you got a social or EIN, you can use both. And I use both of them. So I'm on both sides of the spectrum. I got more money and more credit using my EIN than my social. But I took on major debt with my social, which is going to make the credit profile outweighs the EIN. Now, the EIN I took off fast, but the social is like, I'm going to take off even harder because I'm doing all of my stuff in February. So starting February, the mortgage going to hit my credit report because they don't hit the credit report to 60 days after your first payment. So my first payment was December, so it's not going to come till February. So I still got to wait for that. And after that, it's over with. I already got my banks in place. I'm already banking at this bank. I'm about to get into another banking institution. I'm already having all my ducks in a row. I'm just waiting. The only thing I'm waiting for is this. And this is the real plays. This is not the baby steps no more. This is not the little small. I had a credit card of $27,000. This ain't that. This is the real deal, Holyfield. This is the 100,000. This is the 50,000 unsecured lines of credit. This is the real deal. This is when the real borrowing take place. This is what's really about to happen. And that's why you got to be ready. You got to be ready. You have to be ready. Thanks, family. I appreciate it. Appreciate the love and support. How can I put a heart on it? You know, I heart it. Yep. Heart it. Spanzy, I'm going to put you in my moderator. Mad you as a moderator. Yeah. Yes, sir. Appreciate the love, support. 150,000. Yes, that's the goal. But you can get 150,000 because remember, you might go to one bank and they might give you 50,000. But with my credit report too, I can go to 2-3 banks and do it because remember, they all run different credit bureaus. It's not like they run all three at once. They only run one. So you might go to PNC, they run Experian. You might go to Wells Fargo, they run Equifax. And you might go to BMO, they run TransUnion. 3 different credit bureaus hitting, and you can get all of them done in the same day. You can schedule an appointment for this at this time, schedule an appointment for that at that time, schedule an appointment for that at that time. Walk home with what, 200,000? That's a good day, right? That's a real good day. And you borrow it And then you just like, wow, wow, like you just like 200,000. Then they're gonna still call you a scammer. They're gonna say, "Yo, no, it's serious. This is serious." Like looking at it like this, anybody can learn from it. So it don't, anybody, whether a person who don't like me or anything like that, they can learn from it. Because I know they probably take notes like, let me see what this guy talking about. I'm tired of my job at Starbucks. I'm serious. They want to get, they want a way out. Everybody want a way out. But how you gonna, what you gonna do? You're gonna be sitting right there waiting till a change come. You're gonna wait till the government decide he likes you and give you another stimulus check. No, it's easier than that, family. It's way easy, way easy. It's just we have to wake up to what's going on. We have to wake up to it. And I'm woke. So I'm ready for you. 701 credit score, that's good. That's very, very good. Now it depends on your profile. That's what's going to depend on. Zolo, that's what's going to depend on. Your profile is what says the most. The score is good. The score is about 10%. Your profile is 90%. Your profile is the accounts you have. So if you don't have any strong accounts, they're going to look at it like, hold on. 701 is good, but you got to have a strong profile. Got to have mortgages on that thing. If you don't got mortgages, make sure you have multiple auto loans on your credit. Or one. One is okay, but it depends on what you're trying to get. Like how much funding are you trying to get? Yep. You're welcome, family. Stay blessed. Stay blessed. But yeah, family. I'm glad I was able to teach y'all, give y'all something. And this is what I do, family. So it's no surprise. It's nothing else. It's nothing special you have to do. You don't have to dance in the suit. You don't have to learn economics. I'm not going to tell you just to work hard, but not giving you clear directions. Build up your credit profile. Add authorized users on your card. Take on auto loan debt. Take on installment debt. This is all the stuff I teach you in my credit criteria tutorial. That's it. That's the same thing I teach. That's all I teach. I just go and just explain exactly how your credit report's supposed to look, what factors of credit that the banks look at, how many accounts should you have on your credit, how long your history should be, you get what I'm saying? What is red flags to the bank? And also what industry are you in when you're dealing with business? Now, if you got a good profile and you're not trying to get a business loan, you're just dealing with the personal side, you can do the same thing. You don't have to deal with the business side. You can do the personal. And personal, you can just get just as much as you can on the business. I know another, I'm gonna tell y'all something, right? Here go another play. Now this play is for those who don't got mortgages on their credit. Let's just say if you wanna be in a position where you wanna borrow $80,000 cash, you can go to this website right now. Go to Lightstream, LIGHT, stream, STREAM.com, right? Or .org, whatever, But try .com and .org. Lightstream.com, then try lightstream.org. I don't remember, right? So this pretty much is a company. I want to say, yeah, they run a hard pull, but they run you with TransUnion, right? So when they run your TransUnion, you get approved for it. This auto loan company is different. So when you get approved, and you sign your digital form, what they do is they wire you the money to your bank. So that means they don't send you a check. They don't do any of that. They send you the money to your account, and you are supposed to, write the dealership a check, or you give them a certified funds. You go get them a certified funds check. You get what I'm saying? So that's what you have to do. Yep. You got to give them a certified funds check. And you don't have to, but you can take the damn money and not give them nothing. And you got to send them the title. But if you don't send them the title, it's going to transfer to an unsecured personal loan. That's a direct cash. That's no that's no in-house financing. That's not a draft check or nothing. That's straight cash. That's going to get deposited right into your Chase account, right into your Bank of America account. And 80,000, trust me, a lot of people can use 80,000 in these times. And if you make 4 or 5 successful payments, you credit worthiness. Now you credit eligible. You can grab whatever you want. So don't place no limitations right there. It goes even further than that. It goes way further than that. Look at it like that. It goes way further than that. You can really use that 80,000, and then you can be paying them back on a month-to-month basis. And now it's gonna show installment loan on your credit. And so while you paying back an $80,000 installment loan, then you could take the money that they gave you and actually go to a bank and just get financing for 80,000. And once you get financing for 80,000, you go grab your car without making a down payment. So now you're paying two companies off, and you got the 80,000, and you got the car. Two things reporting on your credit, and you go to the bank and borrow $100,000. Ain't that crazy? It's just that simple. It's just that simple. Nothing spectacular. Nothing like just mind blowing. It's simple. Sometimes simplicity beats everything. But what about the upcoming? Oh, you said that. Thanks, family. Appreciate it. Send a video to every boomer that you know who is saying money is tight these days. For most people, yeah, because boomers come from a time where money was actually real. If you born pre 1970s, you born in the 40s or 50s, and you was around that time, money wasn't just money was actually backed by gold. You get what I'm saying? Not backed by gold, but money became debt in 1970s. But in 1933, we stopped using money to back. Like it's a lot, y'all. But pre 1970s, it was good. It was good. Money was actually real. It wasn't backed by gold, but it had a balance in the financial systems. So the boomer is taught to work hard, break his back, work 12-hour shifts, have bunions on his feet by the time you get home, and complain about work the next day. But in this new generation, it's about credit, 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 borrow, 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 party, party, party. That's how everybody think. Just different generations. You want to have that balance. You want to have that understanding, like the boomers do, but you also want to have you want to be updated what's going on today, so you will be in a position to, all right, okay, I can win. This is what I need. This is the systems that I got to put in place. Yep. You got to look at it like that. These are systems that got to be put in place. This is what I got to do. This is what I lack at, and everything like that. Yeah. Yep, family. Yep. Zolo. Yep. Anytime, family. Anytime. Anybody got any questions? Any questions? Do anybody have any questions? Does anybody have any questions? Just give me the motivation you gave me. Yep, anytime, family. Take that motivation, but build that level of discipline to build it. Just take that level of discipline to build it. Don't worry about it, because in February, I'm going to be taking you guys to the banks with me. So I got a fan. Y'all know how I can get like a secret camera? Because I'm going to get a regular camera. I'm going to record the whole thing. So when they say approved, I'm going to show you guys. I'm going to give you guys some insights on how to do it, what I did. And I'm going to be going to the banks straight on. Like, I want this, I want that. Then we're going to go and buy the property. Remember, I told you guys, we're going to put 5% down towards a construction build. That's going to be next. But that's first, we got to get the money first. We got to get all the money first. Then we go ahead and do that. And this is, remind you guys, this is not the sovereign side. That's why, I'm about to post my, channel, because I already started it up. I'm just deciding the name. I'm thinking about what name I should go with. Because if I go with this name, that's when I'm gonna let you guys know, because I'm making a financial channel. So those who follow me for status correction and everything, you can stay on this channel. But for those who finance, is on another channel. And the reason why I'm separating the two is because people keep mixing it up. I don't want, and then I think I'm forever stuck with the title of being sovereign. I'm just so happy to teach sovereignty, but that wasn't just my main thing. My main thing is really business. Primarily because after you get the status correction, you're not really discussing the status correction anymore, because it's like you live it every day. I live it. But when it comes to that, I don't want people to mix it up. So that's why I prefer to start a new, whole thing. But the new channel gonna be more hands-on. Like we getting right to the whole thing. We getting right through everything. When it comes to applying for loans, what are you saying to do about the inquiries that pop up once you start applying too many inquiries? Yes, you look, so pretty much looking for credit. Yeah, like you said, you look thirsty to the banks. So the banks is less hesitant to lend to someone who have 20, 30 inquiries on their credit report, because to you look like somebody who just looking for credit. So looking for credit is actually a bad thing to the bank, especially when you have a weak profile. Now, if you had a good profile, they might overlook some inquiries. But if you have a weak profile, like your profile is barely making it, and you out here just applying for extreme numbers, like some extreme stuff, and you expecting to get it with that type of profile, that's when they're gonna kind of reject it. So make sure don't mix up that, Get the new Ray-Bans with the camera. Okay. Yeah, because I'm gonna have to go into the bank, sit down with her, and we gonna do some numbers. Then we're gonna do some numbers. The whole goal was to get the house, put it on my credit, then go ahead and go grab these unsecured business loans. Because remind you, both of my corporations over 2 years. Both of my corporations. I got two corporations that's over 2 years. I got one that's 4 years, and one almost 5 years, and the other one is 2 years. So I got two corporations that's over 2 years. And the best thing I can do right now is put that mortgage. I'm waiting to that mortgage hit, because I'm not gonna do anything without that mortgage hit. I'm not doing nothing, because honestly, all I'm gonna do is get denied, especially for the loans I'm talking about. Like, they gonna say, "What? You ain't got nothing on your credit. Your credit naked." How much would you need? For that 90-day credit bill? To build your credit in 90 days, realistically, you will need at least $1,500 to $2,000 if you want to build it where you can grab something for real. Because the thing about it is, you got to grab. I'm gonna tell y'all some sites. You got Credit Strong, you got Rental Karma, and those good. Don't get me wrong, those good, because you can put a secure line of credit that's worth $25,000 on your credit, and if you put $25,000 worth of secure line of credit, that's good, especially when you got to pay back a lot though. You got to pay like $400 a month for it, but for $25,000 reported. And on top of that, if you put rental history on your credit, you can put it like you paid $2,500 a month. Just have your mother, grandma, or somebody who owned the house sign over and co-sign for you and say they was your landlord, and they charge you $2,500. So now you got two installments on your credit. No, one installment, one revolving, but the revolving for over 2 years, and they showing good rental history. And then on top of that, you can go, you can go put another one. What's the other one? Kickoff. Like, it's a billion things you can put on, and it's simple. And you don't have to make it like it's so complicated. And make sure that you put at least 15 to 20 accounts. I'll say 20 and better, 20. And the reason why I gotta say 20, because the more thicker the profile is, the more history the profile shows, and the mixed accounts is, and the lower the inquiries is, oh, you win. You win. So when it's time to go, it's time to go. And you're gonna get what you want. Because when it's time to go, it's time to go. So they ain't gonna play with you with them type of accounts. And it's positive payment history, and you pay it all the way up. Wait till June. I'll say June. For right now to June, get ready. And then June 1st, start smacking them. Whack, 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 whack. Get whatever you want. Get whatever you want. I won't say June, but that's for me. I will overdo it. I will try to put like 30 to 40 accounts on my credit report if I don't have a mortgage. Now, if you had a mortgage, you wouldn't have to do all that. You get what I'm saying? By you not taking on that type of debt, you won't have to do all that. You got to just put regular accounts then. You get what I'm saying? You got to put a lot of regular accounts since you didn't take on a mortgage. So that's why I say you got to weigh your report. Your report says everything to the bank, not your score. Your score is good, but your report says everything. What kind of revolving payment do they favor again? Revolving accounts are credit cards mainly. Lines of credit and stuff like that. That's what that is. Installments is what they want. You get what I'm saying? Because installments is like loans you're paying back. Revolving lines of credit is not really loans. You get what I'm saying? So they like them, especially if you got history, but they want you to have installments on your credit before anything. Legal bank robber. Yes. Yes, legally robbing banks. And the reason why I say you legally robbing a bank is because if the bank and the institution, if they knew exactly how I was teaching it and how I broke it down, they would actually be disappointed. It wouldn't be illegal, but they would be disappointed because by you using a banking system only to borrow, to gain way more capital to borrow again, it's pretty much like you using a banking system not to economically grow the United States and have taxpayers and everything. You only using it for your own advantages, where you making a situation where you pay zero in taxes, which is true. You don't pay taxes when you borrow. You don't pay taxes when you buy real estate. You don't pay taxes. and you don't pay taxes when you borrow against the equity of the real estate. So, you know, can y'all hear me? What about right now? Yo, okay, yeah. So home equity line of credit is excellent. It's excellent. Like that's very good to have on your credit report. That's very good. It's almost close to a mortgage. It's okay. It's real good. While building my EIN, I purchased one trade land. Now I'm looking to get unsecured. That's good. That's a good start. That's a real good start. You know, don't expect everything, but you know, it's a good start. Get the profile running. Get yourself a couple apartments. Make sure that you can run rental history through them. Make sure you get you a couple secure cards, and that's the baby steps, y'all. That's very where we started. Then you got to put that debt on there. You have to. You have to. Then after that you could take off. Then you wouldn't have to worry about nothing else. 5 times 5. Yeah, family. But you know that's how you build your profile out. That's how you do it. That's how you do it. That's how you do it, family. Anybody got any questions? Anybody got any questions? All right. Well, I'm gone, family. I'm out. Peace and love to everybody. And if anybody want the credit criteria, just let me know. My phone number is 224-463-1848. Again, my phone number is 224-463-1848. I'm out. Peace and love to everybody.